To start off with, it's infra major GMR that's going to be in focus. Remember, the company has been focusing on an asset-light strategy, and in continuation of that, its subsidiary Homeland Energy Group, in fact, has sold stakes in 2 coal mines in South Africa. They've sold these mines for about $50 million. And remember that one of the mines is already operational. The other one is in development phase. And the company had bought these 2 mines way back in 2008 for about $50 million as well. In fact, part of these proceeds would also be used to pay off $25 million for a loan to ICICI Bank. So we'll of course be trying to touch base with the management as well later in the day for this. In addition to that, a smaller name at that, Clariant Chemicals. Now, news aftermarket as on Tuesday suggested that the company has sold off 3 of its business divisions for about 209 crore rupees. So they have exited their textile chemicals, paper specialities, as well as emulsions business. Another mid-cap name that's going to be in focus is going to be a special graphics-based company called Prime Focus. Now, reports suggest that they are in race to buy Rhythm and Hues, which is a US-based special graphics company, a special visual effects company. Now, the company, that's Rhythms and Hues, has filed for bankruptcy recently, and in terms of financing the deal, reports suggest that Prime Focus has raised about $10 million from Asian PE Fund 8 Capital Partners to partly finance the bid. And lastly, we are going to be seeing a lot of nifty changes as well, effective of 1st of April. So today, of course, is the last trading day before these new changes kick in. So remember that we've got Wipro as well as Siemens that will be exiting the Nifty on Monday, and what we'll be replacing them would be an IndusInd Bank as well as an NMDC. And with the addition of IndusInd Bank, the focus on banking names in the Nifty actually take prominence once again. So it's going to be about a third of the index now is going to be from the banking side. So keep in mind all these names.
Well, Tata Steel, REC and Muthoot Finance were the 3 stocks buzzing in trade. India's largest steel producer sank about 2.5%, backed by 1.5 times volume on a 2-week average basis. Year to date, the stock is already down about 29%, and half of this knock has come in the last 8 sessions, where it has slid about 14.5%. The stock has hit a fresh 52-week low and is currently trading at the lowest level in nearly 4 years since May 2009. The company plans to raise about $1 billion via rights issue, for which it is in the process of finalizing banks by April, and it joins companies with the likes of Bharti, Airtel, Jindal Steel and Power, as well as Reliance Industries in tapping overseas markets for funds, most of which is going to be used to refinance the existing debt. And since the debt levels will largely remain unchanged, the company's financial metrics are not really significantly going to improve from here. Also bear in mind that the company is already grappling with excess capacity, falling prices as well as rising operational costs, and this is what is weighing on the stock price. Next, REC charged up a good 3.5%, backed by the highest volumes in 6 months since September. It set up an FY14 loan sanction target of 66,000 crore as well as an FY14 disbursement target of 31,500 crore to fuel the growth going forward. The government intent on resolving the SEB issues by implementation of the FRP as well as the FSA is easing the risk of higher delinquencies, and that is raising the positive outlook on the stock. Lastly, Muthoot Finance rose about 2% after sliding about 16% in the previous 5 sessions. This was because there were some concerns that there would be under recoveries on select gold loan portfolios due to correction in gold prices. But after the management has clarified that it gives out a lower loan value compared to the gold that is pledged against, and also that it is undertaking regular interest collection, that is erasing worries that earlier gripped the stock, and that is why we are seeing the stock move off from the earlier lows.